Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 21st of August. The Canadian dollar jumped on Friday after data showed that the nation's headline CPI rate rebounded, as was widely anticipated. Meanwhile, the core rate remained unchanged at 0.9% year over year, also in line with expectations. Despite underlying inflationary pressures remaining subdued, the rise in the headline rate is in line with the Bank of Canada's view that inflation is likely to rebound moving forward, and the heightened market expectations for another rate hike this year. Currently, the probability for another Bank of Canada rate increase this year is 90%, according to Canada's overnight index swaps. Overall, we think that the Loonie's outlook remains positive amid the aforementioned speculation for another hike, solid economic data, and the prospect for further rebound in oil prices. Our favorite proxy for further Loonie gains is still dollar CAD, given the weakness in the greenback, which has remained on the back foot lately amid subdued expectations for another Fed hike this year and renewed political uncertainty in Washington, D.C. The key risk to our view may be any comments from Bank of Canada officials expressing discomfort with the currency's latest gains. Dollar CAD traded lower on Friday following the rebound in Canada's inflation rate. The pair slid after it hit resistance slightly below the 127 line to stop near the 125.55 support. In our view, the short-term bias is back to the downside, and as such, if the bears prove strong enough to break the 125.55 zone, we would expect them to aim for the next support territory of 124.15, marked by the lows of the 26th, the 27th, and the 31st of July. As for the bigger picture, the rate continues to trade below the downtrend line taken from the peak of the 11th of May and well below the psychological zone of 130, which acted as the lower bound of the sideways range that contained the price action from the 9th of September until the 30th of June 2017. Therefore, the bigger picture is negative as well, which enhances the case for the pair to continue trading south for a while. Now, moving to the energy market, oil prices surged on Friday, a few minutes ahead of the weekly Baker-Hughes data, which showed a decline in active oil rigs in the US. The early spike in the precious liquid may have been owed primarily to political developments in Venezuela. The renewed political turmoil in the country probably led to speculation that the US may intensify its economic sanctions, something that could remove a significant portion of Venezuela's oil production from the market. Moving forward, we think that the short-term outlook for oil has turned positive. Besides the decline in US oil rigs and the prospect of fewer exports from Venezuela, Libya's largest oil field was shut down during the weekend, which is likely to weigh further on supply in the short term. WTI surged on Friday, breaking above the resistance now turned into support barrier of 48.10. The rebound came after the price found support at the upper bound of the downside channel WTI was trading within from the beginning of February until the 25th of July. Thus, we see the likelihood for further advances and a test at 49.30 soon. Decisive break above that level is possible to see scope for more bullish extensions, perhaps towards the well-tested barrier of 50.35. Having said that, though, we don't expect any further gains to lead into a major healthy uptrend. We still believe that the range between 51.50 and 55 is the area where US shale producers may be attracted to increase production, something that may put a lid on any possible future gains. Now, as for today's highlights, the economic calendar is empty, with no major events, indicators, or speakers on the agenda. As for the rest of the week, on Tuesday, Germany will release its ZEW survey for August, while on Wednesday, Eurozone's preliminary manufacturing and services PMIs for August will be in focus. On Thursday, in the US, the annual Jackson Hole Economic Symposium will commence and will conclude on Saturday. As for the economic data, we get GDP prints for the second quarter from both the UK and Norway. Finally, on Friday, all eyes will be turned to speeches by both Fed Chair Yellen and ECB President Draghi at the Jackson Hole. We expect market participants to tune in for any updated signals on policy from two of the world's top policymakers. As for the data, Japan's CPI is for July, Germany's IFO survey for August, and US durable goods orders for July are all coming out. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.